All right, I have another question that I don't think I understand this correctly. So I wanted to look up the bills that passed committee today. And A6306 came up and it said that it authorizes up to 300 million in state tax credits or subsidies for renovations at qualifying sports and entertainment venues, which would be Newark's Prudential Center, home of the New Jersey Devils. And it doesn't specifically name the Prudential Center, but its criteria are so limited that it kind of has to be the Prudential Center from what I can see. And it requires the project to generate an economic activity of at least 150% of the incentives received. But what it made me think of was the new legislation with the HOAs, especially for senior communities, where their HOA has to be high enough to cover anticipated renovations to keep the houses safe. And that stemmed from the collapse of the condos in Florida. So follow me here and tell me if I'm totally off base. The Prudential Center has like $680 million in sales every year. And it contributes about $30 million in yearly state taxes, $4.5 million to Newark. And in its 2023 box office alone, it hit 93 million. It makes it one of the world's top 10 arenas in revenue. But it's 20 years old now, so it needs renovation. So this gives 300 million in tax credits for the renovations to address infrastructure and wear, from housing 3,000 events and 23 million visitors. But just like they're making the HOAs plan for planned maintenance, like needing a new roof at some point, shouldn't that be factored into the management of one of these centers? Shouldn't there be a fund that we're putting away every year to, like, in 20 years when you got to renovate things? And when they give the 680 million, like, that's not what they pocket. That's not their profit. That's the sales. And then they pay out to vendors and the things that are happening there. And it's a publicly owned arena that was built for 380 million in 2007, and it still carries bonds. So our seniors in retirement communities are expected to pay their own way, but because this was a public project and nobody planned for the renovations that they knew would have to happen, it's an extra burden. So they can pay out $80 million in player salaries to the Devils, but not put away a little bit each year to make sure that when they have to renovate, the money is already there. But I might not understand things correctly because I'm learning as I go. So if I am looking at this completely wrong, please educate me in why my thinking is off.